Of the London session open. Today is September 17th, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Financial. This is a live webinar we're hosting from our London offices just next to St. Paul's Cathedral. And I'm going to provide you guys with a quick update on the Euro-Dollar, Bitcoin, gold, crude oil, and the DAX 30. I'm also going to take a look at the economic calendar today and see if there's anything interesting coming up in today's trading session. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. As well, I'm going to share with you guys my outlook on the market and going to share with you where I think that traders are buying and selling. But this is made with an educational purpose, and also please note I don't trade all of the markets I cover. I cover a few select markets. I trade a few select markets, usually no more than 5. So you need to bear that in mind. Okay, good morning Maurizio, good morning David, and good morning Hi. Thanks so much for joining me in the chat box today. I hope you had a good weekend, guys. I had a very good weekend actually. I was invited to watch Chelsea versus Cardiff City. Very nice Premier League game. 4-1 did Chelsea win. So very good weekend for me. I hope you had a good weekend as well. Now when it comes down to markets though, unfortunately I suspect it's gonna be a bit more sluggish and boring for a little bit longer. The biggest news over the weekend is that Donald Trump is probably gonna introduce a 10% tariff on about 10 of goods at a value of 20 billion. So the US government has so far introduced tariffs on about 50 billion, and now they want to introduce tariffs on 10% on 200 billion. And if that doesn't work out, they're probably gonna put tariffs on the rest as well. But it could be that is gonna happen maybe after Christmas. And it's not certain that this sort of latest round of tariffs will be included, because it starts out by them saying we're gonna do this, and then they have like a consultation period, and I think that consultation period ended already Thursday 2 weeks ago, and now it's just pulling the trigger. But they're not pulling the trigger today. I think they're gonna pull the trigger in the next few weeks or so, to sort of again put pressure on the Chinese government to make the changes that the Americans think they should be changing. We'll see if that works out. So far, we have not seen a big reaction. Like if you look at the New Zealand dollar and the Aussie dollar, they're actually up. So we haven't seen a massive change here. The traditional, typical move has been on these sort of bad news, the dollar would usually gain, and New Zealand dollar and Aussie dollar would usually decline on the back of these news. But we haven't seen that so far. In fact, they're up a bit, these two markets. Now, when it comes down to the euro, the ECB didn't really share too much news with us. They will go ahead and literally by end of December this year, there's not going to be any more quantitative easing from the Eurozone, and then maybe by the end of summer next year, we might see another rate hike. Potentially, they'll increase interest rates before that. It sort of depends on how wage growth and the general economy is doing. So we need to be flexible here. I would argue and say that the Federal Reserve have already increased interest rates, and they will increase interest rates maybe 2 times more this year. So I personally think the euro should go lower, but the technicals here and what people are focusing on is something different. So again, as I've been saying over the last few weeks, if we trade above the high here, then I think we can go higher. Whereas if we trade below the June low, I think we can go lower. Now, it's possible to sort of sell at the highs and buy at the lows and sort of range trade, but I'm not the right person to listen to. There's probably someone somewhere that is really good at trading ranges. And if you find somebody that's doing that for years, then I think they should be able to help you. Not somebody that done it good for the last 2-3 weeks, because that's anybody can get it good in 2-3 weeks. But if they've done it if they've done it and it's like sort of what they do, and they've done it good for at least maybe 2 years, then it's worthwhile paying attention to. Otherwise, I think you will just be wasting your time. So the way I went about and solved that problem is that I don't trade these markets at all. When there's something not moving, I don't trade them. I just ignore them. Now, this is the pound versus the USD, and the pound dollar, we talked about buying here a few days ago at 29.63 and book profits at 31.41 about these levels. And then I said, if we correct to the downside, I think people are gonna look to buy again. And I said, I pointed this level, which is 130.57. We didn't actually reach that level. We missed that out with a few pip. And my idea was the market to bounce here and head higher again. I'm gonna stick with this idea, but of course, if we missed out on the dip here, then there's no point buying now because your risk reward is just not gonna be good. And I think here, there's really a 50-50 chance. In fact, I think there's a 60% likelihood that we're gonna go down to maybe 130.25, so that we will go back to this buy zone and then bounce from these levels. So I'm gonna stick to my idea here, and if one didn't get on board here, then I do suspect we're gonna go back again and then potentially trade higher. Here are gold prices, and gold prices unfortunately are they're tricky and they're trading sideways. How do you know if you're trading sideways, the markets? Well, if you try to sell like we did here and then you get stopped out, and then if you buy and you're actually not making money on that either. So you're not making money on being short, you're not making money on being long. That's when you're in a range bound market. And we are stuck in this range here between the September 11th low and the August 28th high. And sometimes it's like this. In fact, this September feels the way August should have been. But the summer was quite good, at least for me, because you might remember we had these strong declines in silver, copper, and in fact gold as well was moving to the downside, and we had a nice healthy trend. Here in this presentation, we were trading up here and in a range, big range at that time, and I said, if we take out these levels here, we're going to head to the downside. And surely we did. The whole market declined with about 10%. But now, starting September, stock markets are boring, gold is boring, euro dollar is boring. I traded South African stock market indices. It worked out fine for 2-3 days and then got stopped out. I shorted the Spanish stock market. I was up for a few days and then I got stopped out of break even again. So the market and traders don't really know exactly what they want to do, and we just need to wait for those breakouts. Here's crude oil, and crude oil is bullish, and you have a low here, and it's difficult to sort of pinpoint, but I'm arguing that this sort of is some sort of a left shoulder and this is some sort of a right shoulder. Now this is easy, right? So the target here, if this is a head and shoulders, an inverted head and shoulders, that if we take out the trend line, which is up here right now, we could rally upwards. And then you have a triangle, which is this big pattern here. And that pattern suggests that that pattern A suggests that we are going to trade sideways for longer. But it also suggests that if we take out this trend line, that we can go higher. And the pattern of this triangle is up here, whereas the pattern of the head and shoulders is here. So I think if we take out this double top, I think that could potentially create a quite strong reaction. We will reach the 2018 high, if not all the way up to these targets. And this could potentially be a very good, solid residual ratio setup. So this is something to keep an eye on over the next few weeks. Here's the S&P, and in the S&P, we had a setup a few days ago when I said, look to buy. Here it was. And then on Friday, we had moved up to our profit target, and I said, if we go down, I think traders gonna buy. Now, I made some adjustment to the buy zone, entry zone, which is down here at 28.94. So I think if we do go down here, I think traders gonna look to buy. Obviously, they're buying here already, but there's not too much we can do about that. It's important, that risk-reward ratio. And in fact, some patterns are just more important. Like, I trade predominantly bigger patterns on the daily now, not as much short-term. And I do manage my positions based on the daily with the 4 hour and the 6 hour and sometimes even the 1 hour. but those big setups on the daily usually works out really good. Anyhow, here, buying here right now doesn't make sense. We need to buy down here if we're gonna buy, because that's gonna give us a risk of about 165 pip, and if we go up again, we make maybe 163. So we make back exactly what we're looking to risk, and then obviously if it takes out the high, I think we can go higher, which I actually think we will do anyway. There's this big overarching pattern, which is an inverse head and shoulders, which suggests that we can rally to 3017. So I would remain bullish here. I would probably not hold it all the way up here unless we really have that long-term view. It's a bit choppy and it corrects quite strongly backwards many times, so I think if you can grab some, get out, and then look to get involved again, I think that's better. Here is the DAX 30, and the DAX 30 was stuck in this big triangle. The market took out the lows. It's now back into the pattern. Even if you were selling on the back of this, you would have been stopped out at break even. I now suspect that this market is going to continue to head into the pattern. But people are looking at this and they say, well, I have this series of lower and lower highs. I have this downtrend as well, or this trend line. Like, I don't want to buy into this market. So the alternative is to go something that doesn't have that, but is still moving to the upside. Because if this is going to go up here, well, most likely the S&P is going to be above its 2018 high. So this is the market you want to buy in the S&P if you believe on higher stock markets. If you're believing on the markets rolling over, and then you're probably better off trading something like the DAX 30. The only thing we didn't cover was cryptos, and let's do that now. So Bitcoin, not much happening here either. Fortunately, very, very boring, and there's not too much to do about this right now. The market is guided lower by this downward sloping trend line and these highs. What you're looking for this market to turn bullish is to take out that September high. Take out the high, we can go upwards, and then take out the low here at 5,786. I think we can go down to maybe 3,391. But I have seen targets even here at 2,500-ish. I'm not really sure how they're figuring that out, unless they're taking, if they're taking this, which is the base, then yeah, I guess that could deliver that profit target. Let's see here, 49% decline. Oh, down here. So based on this section here, we have this first target. Based on the base of the pattern, you have this target here. That's on the break to the downside. Now you might say, okay, so do we have any short-term setups here? Well, look at this. It's totally dead, this market. Totally dead. There's nothing happening here. The market is stuck in a $222 range, which for this market is nothing. I mean, $222 over the current price, that's 64.74. That's a 3.4% change. Like, a good day for this market is 10% up, or if you're short, a 10% down move. And a really, really good move will be 30% up. So there's not much happening here, and it's easy and tempted. You can look at the 1 hour and you can say, okay, I see some patterns, but there is very no patterns here. Okay, let's see if you guys have any questions. So you have no questions about the markets, I think that's fine. I want to thank you so much for joining, and if anybody just joined here, this is a daily market update. I think the best way to keep track of when I go live is to follow me on Twitter at AlexFX00 as well. You can or should subscribe here. If you subscribe to it, and then there is a little bell here, and when you click on that bell, the trend, you get a notification. Okay, so I got a question here from David about the Nikkei. All right, okay, so let's take a look at the Japanese stock market. And Okay, so this is the Japanese stock market, and the Japanese stock market is heading to the upside. I'm not sure if I covered with you this in the past, but so this is the Japanese stock market, and this is a daily chart, and it's those sort of patterns I like to trade, which unfortunately I didn't take, or should have taken it. So you have a left, right shoulder, head. So this is very easy. That's another sort of good rule. If you force yourself to find a pattern where there's no pattern, then that's a big red flag. Here, however, it's very clear to see that this is a head and shoulders, and inverse one, and the difference between the low or the head and the neckline is 7.4%, and here suggests really we can travel all the way up to 24,651, and here we had that breakout, so ideally you should already be long from 23,000-ish, 23,000 something. If you're lucky, you might have a little pullback, and here this is the breakout candle, and as long as you're above the breakout candle, so about 22,943, will be on the right side of this pattern. If we go below it, we're going to be on the wrong side of the pattern, and this will be a false breakout. And here you would look, I mean, unfortunately it's missed out. I missed out this as well. I think if we're lucky, maybe the market will come back a bit to the lows seen today. This will be maybe 23,174. This will be, if the stops will be placed below the breakout candle, that will be a stop loss of about 1%. And then the potential reward would be, that will be 6.36% return. So 6.36 divided by 105, that's 6 times the money. It is technically fine as well to buy now. Sorry, it's okay to buy from a risk-reward ratio setup as well. The risk-reward ratio right now would be, so would be risk 1.43 to make 5.75, 5.75. I think 1.43 I said. So it's about 3 point, I think it's almost 4 times, 3 point something. I think 3.9 risk-reward ratio. And yeah, personally though, I would just wait for this to pull back if it pulls back. These sort of setups, you'll have maybe 2 or 3 per month usually. Not always. This month has been very dry, but you'll have several of these setups per month. And these are sort of the setups I try to trade the most nowadays. Okay, that was it. Guys, thanks so much for joining me, and I'll see you guys tomorrow, same time. As well, don't forget to like the video, just press the little button down here. That would be much appreciated. And as well, very important, do follow me on Twitter, and I would appreciate, especially you regulars, if you could retweet when I go live and things like that, because it really helps to build the website. The website is just 1 year old, so it's a young project, and the actual website is managed by, or is owned by Amana Capital. So we need all the help we need, all the help we can get to grow it. Okay, have a good day, guys, and I'll see you guys tomorrow same time. Thank you.